Intel is getting a $5 billion lifeline from a rival. But is this just a band-aid on a much deeper wound? Today, we unravel why Nvidia's stake in Intel may help but doesn't solve what might be Intel's biggest problem. Stay tuned. On screen, Intel, Nvidia logos, stock charts, $5B deal. First, let's lay the facts. On September 18, 2025, Nvidia announced it would invest $5 billion in Intel, buying common stock at about $23.28 per share. Key elements of the deal: they will co-develop chips for data centers and PCs, meaning Intel CPUs will be integrated with or paired with Nvidia GPUs or accelerated computing architecture. Nvidia becomes one of Intel's largest shareholders, roughly a 4% stake after Intel issues new shares. Intel gets a boost in capital, which is badly needed after years of loss and underperformance. Market reaction: Intel stock shot up about 23% in a single day, its biggest one-day gain in decades. Why are people calling this a potential turning point? Because Intel hasn't just been losing badly on the profit front, it's been falling behind in manufacturing tech, GPU integration, and credibility in the AI era. This deal gives Intel a 1. Cash infusion, more capital to invest in R&D, fabs, packaging. 2. Strategic partnership, integrating Nvidia's graphics/AI parts into Intel's chips, which could be a big help in closing performance/feature gaps. Political/national backing, this ties into US efforts to shore up its semiconductor sovereignty. Remember, just a month earlier the US government took a 10% stake in Intel. Also, for Nvidia, there's upside, being closer to the CPU-GPU integration that powers AI systems, having Intel's ecosystem strength, and perhaps less reliance on external foundries, though that's a complex part. Here's the crux: despite all the promise, Intel still has a big, lingering weakness, namely its manufacturing technology/foundry business, and that's not going to be fixed overnight by a $5 billion deal or a partner. Let's unpack that. 1. Tech gap versus TSMC and others. Intel has been trying to catch up to leaders like Taiwan's semiconductor manufacturing company, TSMC, in terms of process node, smaller, more efficient transistors, yield, how many good chips per wafer, and capability. Multiple sources point out that its foundry business has not yet won over major external customers.